Hi, this is Kim Watson. Welcome to this week's weekly outlook. I will be looking at when not to follow hedge funds, and when maybe you're just as well to do so. But anyway, we'll come on to that in a little while. Firstly, let's have a look at let's have a look at the old my analysis here for the week. Looking at interest rates, etc., no changes there this over the last couple of weeks. However, of course, the big focus last week was on the Fed Powell speeches, which has really come to the point where it looks like it's probably going to be 0.25% and not 0.5% cut. And there's been other speakers, but we've got more speakers out this week. And I've just put, the 16th, which obviously is tomorrow, and then 18th and 19th we've got more FOMC speakers. So just watch out this week. It's the last week they speak, I believe, before they have to go quiet, and prepare for the 31st when we'll actually get a result, but or we'll hear what they actually do, should I say. Looking at the dollar itself in that time, asset managers have gone back into it a little bit more. Hedge funds have pulled away from it a little bit more. One thing to bear in mind with the dollar as a future here is that it doesn't get traded massively compared to the likes of the euro, the pound, etc. There's and yen, much more significant holdings. It's a relatively, these net positions really summarize it compared to some of the lesser currencies, should I dare I say it, but the New Zealand dollar, for example, is, it's even that's bigger than what's being held in terms of net positions on the US dollar there. So bear that in mind. Anyway, so that's the euro, the US dollar even. Following on from that, the euro dollar, well, it's gone a bit quiet, but they're looking for replacements, etc., for different members, Draghi, etc., and I think that's been sorted now. But at this stage, we're a week away. Next week we will see that they have the ECB meeting. Up until then, we've got very little data coming out from the European Union there. What we are seeing, though, is we're seeing the asset fund managers cutting their euro positions a little bit this week, and the hedge funds getting more bearish, so that they are agreeing on the sort of direction there, really, maybe easing back a little bit after having pushed up. Now, sorry about the technical trend here. The euro is not really in a positive daily trend there. It's more of a crisscross, and I think what I was going to come back to was just sort of summarizing that these currencies at the moment and where the dollar is, it's on that crossroads, and there's so many naysayers of the dollar, and they really want to see it sold off. I think a lot of people must be holding the other side of this position. However, it's still, in my book, what you've got to watch out for, and I've said it many a time, is the fact that if the world economy is slowing down and everything goes a little bit pear-shaped for a while, where's the money going to go? It's going to go between the dollar and the yen and the Swissy, which I don't cover on here. So they're the currencies that are going to see the inflows. So you've got to be a bit careful. That's all I'm saying. It could be very choppy, and I was expecting, and I had this question on Friday, what do you think? Do you think this is going to run up to about the 31st when they make the decision, and then we see the sell on the news? But it might do, it might not. Sorry, the euro going up until the 31st, not the pound, the US dollar. So it might not. I've got a feeling we're going to end up in this sort of chopping phase, but we'll look at the charts in a moment. Pound wise, well, Brexit dependent. There was more suggestion in the more recent discussions and announcements in the inflation reports, etc., by Carney. Sorry, I keep calling him Carnage, and I don't mean that nastily much. Anyway, and then I'm thinking of PJ Carney's, which is a nice little Irish bar in Times Square. But anyway, there I go off on another tangent. So, ignoring the nice little bars and whatever else in Times Square, etc. But the chap by the name of Carney, all the same, has suggested that the next change may be down, which was probably not a great shock if the economies all start sloping down. And we've seen some slightly less interesting and less positive data coming through on the pound. So no surprise there. On the futures point of view for sentiment. We're seeing both asset and hedge funds selling, so it's more toward that way. Although we will get rallies, and we'll see how it goes. Nice move down earlier today, but I say nice move. It was about 20 odd pips. It wasn't massive, or 30 pips maybe. It wasn't massive, but I'll go into the charts in a minute. But technically, we're still really looking at a bearish daily, bearish weekly there. Retail sales, inflation and employment this week. So 3 decent reports there that may create some volatility. Earnings, particularly from the employment report, I'd be watching for. Inflation, of course, but we've had the bigger reports out on that side of things. But although still, watch out for the inflation and retail sales. So they're the 3 figures, all 9:30 news events on the respective days. Dollar yen, no news this week. In fact, they had a bank holiday today. They've taken it easy. Ruled out near-term increases. That was a long time ago. We know there's no likelihood of any increases here. Where's the money been going? Hedge funds increased slightly more, but the asset funds have reduced their holdings a little bit there, and their net positions have come down a little bit there. However, direction for the yen, so this is sort of still bullishish moves, and they're positive. And for the yen itself, this downward move, of course, is bullish. So it's a US dollar yen. I should put this the other way around and sort of invert the chart, but we only trade US dollar yen. We don't trade yen US dollar. But there we are. Anyway, it's still heading southwards overall. But we'll look at the technicals. Aussie dollar. More cuts may be happening. We've got the policy minutes coming on the 16th. That will give us a bigger clue to what may happen next. An employment report on the 18th. So again, through the Asian session, there early reports there to be coming out. I think they're about 12:30, 1:30 reports. So very early there. Aussie doing well. It's probably daily wise still trending upwards. We're seeing a reduction in the negativity and the hedges there, but more negativity coming in on the asset managers. In fact, I think we are on the New Zealand dollar. I may have forgot to switch that around. I'll have to check on that. But for now, CAD, that's bullish overall. I mean, there was no hawkish tone recently. It's still got some positive potential there on the CAD. Retail sales and inflation out this week, 17th, 19th respectively. Or irrespectively, actually, CPI inflation on the 17th and retail sales on the 19th. There you go. Direction-wise, well, I don't know why I've still got the weekly as trend up now. It has actually broken. That I was looking at a moment ago, and it has actually rolling over. So it has seen a bit of strength there. But as I say, positive asset fund money going into the Canadian dollar at the moment, which quite rightly should be. New Zealand dollar, we had a cut in May, was last time. No news out this week, and probably next week I think we might have some more news on the New Zealand dollar. But hedge funds have eased, reducing their, or got more bearish, should I say, although asset money is still erring towards the more bullish side, but not bullish. Right, and finally the S&Ps. Now this is the important figure here, is a hedge. I wanted to actually show you this. In fact, let's just go straight. I'm sorry, I was looking at oil for someone. I just want to show you this, and this is why you shouldn't follow necessarily, unless you're doing the opposites here, the hedge fund money, because the hedge, which is the leverage money here, generally they're doing, you can see it's inverted, and that may well be in this particular market, because they are actually hedging against the market. They may be this hedge money may be used for negative correlation. So there we go, and that's what it's doing at the moment. It's they're bullish when the market's bearish, and it's bearish when the market's bullish, he says, generally. So there we go. Sorry, I'm looking at this chart and this chart. This is the opposite holdings. Sorry, I should be pointing out the chart above there. So negatively, where they was the most bullish, and they get more and more bearish, and they get more bearish as it's pushing up into new all-time highs. They're getting bearish, so that's, you don't really want to be getting more and more bearish at the moment. I would suggest you hang in there, and if you watch the asset managers money in relatively, and they have it much better timing on the markets there when they're starting to sell off. Sometimes they're selling off slightly earlier. They're generally not later than the market, so they start to pulling in. They're actually pulling in on this level here. They're starting to get long, for example. So you can follow much more of that. This particular site, tradingstir.com, there's a whole video I've done out there. If you just search our videos and look for COT analysis or COT reports, reading the COT reports, you'll find the video I did on it. Right, anyway, this is where, as I say, that was the case. I just wanted to show you when you shouldn't follow the leveraged money there, because you're going to be completely the opposites to, generally completely the opposites. It's not always. There are times when they've completely, it looks like they're doing the right thing, but often when they're actually getting more and more bearish, the market itself is getting more and more bullish. Right, I'll get that out of the way for you for a moment. And what else do I want to look at? Oh, before I just go on to the technicals themselves, let's just pull the right sheet back up here. Go back to this, look at this point, and just look at the summary overall to where things are. No real changes here. Fundamentally, still got the US as a sort of more the strongest one, because they're ahead of the curve a little bit more, with interest rates higher, etc., and still putting out some half decent figures in GDP there in comparison to the others. Sentiment wise, hasn't changed really there, and the change over the 3 months, maybe a fractional slight change between some of these, but in fact the euro maybe get, I don't know, no, 1, 2, 3, that's right, it's in its rightful place there in terms of the strength. Some of these will they're still weakest over the 3 months, but getting there. But of course the US dollar is the weakest. But overall, these are the orders I still prefer to see things in terms of US dollar the strongest, and then looking at yen CAD and some of the benefits when you're looking at the cross pairs. We've looked at we've seen some really decent moves on some of the cross pairs. Even euro CAD had moved quite nicely, so there were some really good cross pairs there. In fact, let's just look at some of those. So if we look at what was I looking? Just talking about. Well, actually, Euro New Zealand dollar. The Euro New Zealand dollar is going against the cusp a little bit there. It's been running. The New Zealand dollar's been doing quite well technically. It's just running against it there. But some of the other pairings, Euro CAD, again solid downward movements. Last week it wasn't quite so strong. It pitched up, it closed off lower, so, and it's broken out of what was a consolidated phase there. So the CAD stronger than the euro in those pairings. You could look at the pound, and you'll see the pound has been really taking a hammering, which is not surprising overall. If you look at the pound New Zealand dollar, actually they're quite close to each other in their not so goodness. But yeah, the pound's really been taking a battering. I'm just looking at other pound pairs recently as we look at them through the room. The pound yen is the common one. The pound Canadian dollar. You've really got two different sides of the markets here, and again this is doing probably better than the US dollar has been doing against the pound. So solid downward phase there for the Canadian dollar. So there was strong strength there, and the pound's just been losing its way there. Right, anyway, let's get on and look at the major cross pairs. Major pairs even, not cross pairs at all. And I've just looked at the cross pairs. Let's have a look. So weekly euro wise, bounce last week, a bit of a bounce. And as I said, I was wondering whether this movement that we're seeing here was something, whether we'd see something more coming through from it on a daily perspective, and bearing in mind that the US dollar's being talked down all the time. It may well just stay in this range. It may just chop along. It's although it's actually come short of coming back to its weekly pivot. Weekly pivot just a fraction lower there, so it's still got potential to run further south. But I do wonder if it's choppy. What do we got here in terms of this daily picture is lower. Actually, the 4 hourly gives you a better picture of it in terms of lower highs that have been through this. But more recently, we just sort of pitched over last week, and it sort of turned things around a bit, but not convincingly. We put the low in here, and it pushed up. It never really gave us any real convincing move there of a higher low. It looked like it might have done towards the end of the week, never managed to do it. In fact, put a lower high, confirmed by the break therein, and this is why I'm just saying it's pretty choppy at the moment. Moving across to the pound. And I'm keeping away from the euro mostly. I mean, some of the cross pairs may give some better movements. The euro yen etc. Yen is certainly giving some good, decent, strong moves at times, but you've got to be patient. Pound already this week, today sold off. Let's just go back to the weeklies there. But you see the weekly already giving back half of what it made last week, or a third of it at least, of what it made last week. It could bounce from where it is at the moment. It's just run through its weekly pivot. Which I was targeting this morning, and which was nice. I'm just going to come down. Well, you can see here lower highs. Now, just a thing to point out here is that there's quite a few traders point out double divergence across there. Got to be a bit careful here because you've got a high that came higher than the previous high here, and to me that suggests it's over at this point. So that was double dip. So once it's gone past the high, sorry, at that point there, it's over. Now it doesn't. So effectively, we could see more downside. So I just wanted to say that no guarantees. And as I said with the euro, and the same could happen with the pound, although the pound's weaker, is that we could see more chop and roll as we run over next week or two until we see the data coming out the 31st. Okay, dollar yen. Yen wise, well, pointing south, bearish week last week, which is for the US dollar, that is, and it's solid downward week in the end. But a lot of that was really in the sort of, I mean, it bounced around a little bit, pulled off first, and then Friday it managed to get its claws back into it and sold back to the monthly pivot there. Not massively convincing at the moment. Small day today so far. If we see a break of that monthly pivot, well, we could see a continuation back to the prior lows there. It's at the moment my preference is to be on the sell side of this, so selling the dollar against the yen. Any retracements, half decent retracements really. Aussie dollar. Aussie dollar, well, this is where we're seeing potentially, we're into this current week, it's just pitching through a little bit here. It's had a decent move last week, a solid old move towards the end of the week there, pushed back up, didn't quite, and hasn't quite yet made new highs here, which if it does, it puts in a higher low on this sort of picture here, and it's a more bullish movement. It has got the potential to just run flat though all of a sudden. It's probably done a bit better because of the potential Chinese talks, we'll see, but benefiting from that sort of part. But it's had its divergence, had its biggish move up. Has it got more momentum in here? Possibly. It's starting to build again. Where to? Maybe that daily 200. So it looks like it's got further upside at the moment. And if this is an A, B, C correction, well, I'd expect more anyway, upside from that point of view. So it's looking better at the moment. Canadian dollar, US dollar, Canadian dollar, this is then. So strength through, let's just click on that weekly. So as I said, really it's switched now properly. It has broken that prior low, which has given us on the weekly picture a lower high, definitely confirmed now. In fact, I didn't do a recording last week. I did the analysis and everything, but didn't actually record it, I'm afraid. But it had actually just broken through at that point, and it's certainly broken that low, giving us a lower high, which suggests maybe some more downside. But again, need to just watch this carefully. It's slowed down a bit. In fact, there is a bit of divergence in this lower time on this daily time frame, which could see it correct a little bit. It has got a weekly pivot above, which may draw it upwards, but also maybe back to that daily 21, if it's, as long as that daily 21 is below those prior lows, prior highs there, it could still be showing further downside. If it pitches up there too quickly and pitches through past that level, I won't like it so much, but I'll move back towards that daily 21, or selling into that 21 would be quite nice, I believe. Okay, that's the Canadian dollar, and finally New Zealand dollar of these majors. So New Zealand dollar pitching up their solid week last week, regained quite a bit there last week. It sold off again at the beginning of the week, just carried on selling off a little bit, running through into Wednesday, then Thursday, Friday, solid days. We have just run a bit, I mean, this is very much similar picture to the Aussie dollar. It has just pitched slightly higher than the prior highs there, but not managed to close above that, which just would confirm for me a better higher low and possibly more upside. Maybe, I mean, this is right into its 200 next target. Well, probably from a monthly point of view, maybe the R1 there at 67.97, so got some potential still to run on a bit there. The only one thing I would say is looking at the signal line here, and it's a bit weaker, and it's even a bit of divergence over these highs here, so it's certainly weakened somewhat, and be interesting to see what it does. If it breaks through, then well, we could just see a bit more of a correction there, but it will still be divergent possibly for a little while there. Okay, and finally let's have a look at the S&Ps. Weekly picture, it's been pushing and pushing, and I mean, making new cash market has been making new highs. Again, it's been diverging for 1, 2, 3, 4 weeks or so. As I've said to many of our traders, I wouldn't want to be trading against it really. I mean, there's been odd days that it's pulled off and whatever else, a couple of days together there previous week, running into the Tuesday there. Then from Tuesday onwards it's been pushing up. What could spoil this? Well, I didn't mention it, but we do have earnings coming out now. So for the first 2 quarters of the year we do have US earnings, company earnings, and that could spoil things a little bit. It's not moving particularly quick at the moment. There's certainly no divergence on this daily point of view, which would go with that divergence that's sitting there on the weekly. So it's or what was on a weekly divergence. As I say, it's what looks like it's worn it off now, but there was a divergence, but it may be just worn off, and certainly it's not there on the dailies. It's pushing up solidly now, or has been. Right, that's pretty much it for me. Have a great week. I'll speak to you, well, on morning outlooks, of course. Take care. Bye for now.